Okay, good evening, everyone. My name is Kamal and I am from Kenanga Futures Sendirian Berhad. Thank you for spending your precious time to join our webinar today. Please take note that futures and options involve substantial risk due to leverage factor and may not be suitable for all investors. This webinar is purely for educational purposes. The company will not accept any liability for any direct or consequential loss arising from any use of the content of this webinar. Okay, so before we start, we would like to take this opportunity to invite you to Kenanga Futures next webinar on 16th of March. It's about 2 weeks away. It will be about pengenalan niaga hadapan minyak sawit mentah, FCPO. It will be fully in Bahasa. An invitation email will be sent to you. Don't miss out. Please remember to register once you receive the email. Next, if you have any questions for our speaker, please post your questions through Q&A box or bottom of your screen, and he will attend to your questions after the presentation. Okay, so today we have Mr. Chong here, and he's going to share with us about exploring trading opportunities in natural gas futures contract. So without delay, I would like to kickstart our webinar by welcoming our speaker today, Mr. Chong. Over to you.
Okay, very good evening. Welcome to our first webinar session of the year. Today we are going to covering the topic of natural gas. I have about 50 slides to present. And let's start. Okay, this is the disclaimer on the confidentiality of the contents of the presentations. Okay. Next. Okay, today's agenda will be, first thing, we are going to cover the fundamental of natural gas. I'm going to introduce to you what basically natural gas is, and although I'm not oil and gas related personnel, so the information shared with you is basically from the research we conducted. And then after that, we are going to cover the topic of the natural gas futures contract specification that is traded in the NYMEX exchange. And thirdly, we are going to assess the potential factors that is going to impact the prices of natural gas for this year. And last but not least, we will be covering the market outlook, market technical outlook for natural gas. Okay, let's get started. Okay, so basically, natural gas is actually a fossil fuel which is formed beneath Earth. It is formed after the decomposition of plant and animal matters that is exposed to intense heat and pressure under the surface of the Earth over a long period of very extremely long time, millions of years. And the energy inside these elements which is trapped beneath Earth. So and if so, due to chemical effect of millions of years, it will become natural gas. And normally natural gas can be found nearby to petroleum, crude oil, basically. And also, basically, when people extract natural gas, basically they are also doing extracting crude oil at the same time. Okay. So some history here on natural gas. It was discovered accidentally in China when the people of China are trying to drill for a branch, which is a type of high concentration salt back in Asian China. And then they actually found a way to burn this natural gas by transporting the gas from beneath Earth using the pipelines made from bamboo. Okay, this is in the district of Sichuan. Okay, next. Some pros and cons on natural gas. Okay, it's a type of fossil fuel, and if it is the cleanest amongst all the fossil fuel available ever been discovered by mankind. And reason being, when it is combusted, it will actually emit less carbon dioxide to the air compared to coal and gasoline. And at the same time, it is abundant in supplies. You can find natural gas reserve across almost every part of the world. It's just a question of whether it is in large quantity or less, and whether it is economically viable to start a drilling. Okay, and the usage is wide, and it is quite convenient to store and also transport. You can actually transport it via pipelines or also tanker using ship. But on the disadvantage side, if it is not burned and it escapes to the air, it actually emits a higher level of greenhouse gas, specifically in methane, which is a high concentration of methane will be released in the air, and this is normally due to leakage of pipeline or tanker, or when in the process of drilling, the gas actually escape from the drilling process, so which we call it flaring. And this is highly flammable, meaning to say it is very dangerous to handle, and it is a non-renewable source of energy. Now, this is the proven supply. Proven supplies, proven reserve available across the globe, and the largest proven reserve. Proven reserve, by the way, means the geologists and the exploration expert actually do confirm that figure, that there is to a high extent and confirmation that there is such a number of available natural gas beneath the surface of the respective country. And the top 5 will be mainly Russia, Iran, Qatar, Turkmenistan, which is also near Russia or Ukraine, and the 5th one will be United States. And Malaysia also having abundance of natural gas, and we are ranked at 24th. Okay, one interesting question is, can you actually set fire on ice? Okay, this is the picture where in the Siberia area in Russia, where beneath the thick ice layer, there is quite a huge availability of natural gas. You can basically poke a hole beneath the ice layer, and you set fire on it, and you see the fire continue to burn and burn. This is basically methane trapped beneath the ice layer in the Siberia area. Okay. Now this is the supply and demand graph based on consumptions and also productions globally. As you can see that the consumption and production of natural gas has been in an uptrend, except for the year 2020, where we have our pandemic. Okay, and it is still unofficial yet, but it is expected to be recording a decline as compared to 2019. And this will be the purple line will be the natural gas prices traded in NYMEX exchange. Now, in terms of top producing country, United States top the list, followed by Russia, Iran, Canada, and Algeria. And for United States also consume quite a big number of natural gas, but although that they are still a net exporter of natural gas. In terms of consuming, United States top the list also, followed by Russia, China, Iran, Japan. And Japan here will be the net importer, where they didn't produce much natural gas in their country. Now, this will be the top exporting country. Russia, Qatar, Norway, United States, Canada, the top 5. This is as at January 2020. Now, this is the top importing country. Germans, Japan, China, United States, and Italy. Why United States as a net exporting country still import natural gas? This is the reason because the pipeline linkage between United States and also Canada. So there is a drilling activity in Canada that is transported into United States. That is the reason why you see United States is one of the importing country here. Now this is the global share of energy supplies. As you can see on the left pie chart here is the data of 1973. As you can see, from the share of energy, oil actually represents almost half of the supply, followed by coal, then only the third one will be natural gas. But as the latest on the right hand side graph, as you can see that the oil has been reduced gradually as the main source of energy supply, and you can see a significant increase in natural gas sharing in terms of the energy for the year 2018. So this chart actually shows you that the natural gas are gaining more demand, and due to the characteristic that it is a cleanest fossil fuel, and it is having less environmental impact, and it is better than burning. It is better as compared to coal and also crude oil. Now, in terms of global natural gas consumption by sector, as you can see, industry consists of the highest. This industry also take into account those power generating, and also then you follow by residential. This is mainly for heating and also cooking. And the third one will be on commercial and public service. This will be on commercial, where industrial and commercial activities, and followed by the non-energy and transport sectors. Now, here will be the second part of the presentation. We are going to cover the NYMEX natural gas contract specifications. Okay, the underlying will be the natural gas meeting specifications set by the Sabine Pipeline Company. This is actually, they will have their surveyor to check on the quality of the natural gas. and then the contract size will be 10,000 million British thermal unit, and then minimum price fluctuation will be 0.01, which is per tick, which is equivalent to $10 per tick. So basically, this actually telling you that you can actually profit come up with a profit with a very small fluctuation of price after the brokerage fee. The available contract month will be all the next 12 available calendar month, and the trading hours will be from currently is non-daylight saving, where it will be start in Malaysia time 7 a.m. until 6 a.m. the next day. If you have a break of 1 hour, in the case when daylight saving begins, then it will be start from 6 a.m. to 5 a.m. Malaysian time. And then the contract will terminate 1 month prior to the contract month. Example, let's say April contract will be expired on the March, third last business day of March, basically. And it is a deliverable contract. And the latest margin as of 2 days, yesterday will be equivalent to Ringgit Malaysia 10,260. Now, this will be some statistic about the futures contract. As you can see here, the red line will be the total open interest, followed by the blue line will be the total volume. Total volume meaning to say total aggregated volume of all contracts available traded. And the green line, of course, will be the active spot month contract traded volume. As you can see, the participation is still quite huge, and you can see this is nearly about 20,000 daily on average. Of course, you can see that it will fall near to zero because of when this is near expiry. So when it is near expiry, normally the next month volume will start to pick up. So in terms of participation, there is no concern, as it is quite an actively traded contract. Now this is the high-low range of the futures contract. As you can see that this is quite active and with quite a big fluctuation in terms of the daily high-low range, and the average range will be about 0.124, which is equivalent to 1,240 US dollar, meaning to say that it is also a very suitable contract for you to do intraday trading based on the fluctuation of the market. And you don't have to carry over the session risk. Now this is the price movement of the natural gas futures contracts for 5 years. As you can see, it reached the peaks of almost $5 and goes to the low of nearly 1.5, and now is in recovery mode ever since after the pandemic evolved. Now, this will be the third part. We are assessing the potential impact of fundamentals development across the world for this year, and this will be the largest part of the presentations. As you can see, the first impact that is going to driven the price of natural gas will be the progress of the COVID-19 vaccination rollout. And you can see that this is the graph that I plucked from our data, our world in data. As you can see, so far the highest per 100 people vaccination rate, highest will be Israel, followed by UAE and UK, and then United States. In terms of the global map, this will be the progress so far. This is as of 1st of March. As you can see, it is still quite overall. I would say that not completely vaccinated, and the rollout will take some time to complete, I would say, and this is a global scale kind of vaccination, so it's going to take some time for it to complete. Okay, this will be our our projection. Okay, if a faster than expected rollout will have if it's bullish for the natural gas prices, but on the opposite, if it's lower than expected, then it will be not so good for the price movement of natural gas. But overall, we rather be conservative in the progress, as this will be the first time a global scale of vaccination. But we cannot deny that with the availability of vaccine in such a short period of time actually have some positive impact to the economy and also the sentiment of the overall commodity prices globally. This will be on the vaccine rollout. The next factor will be how soon the global economic recovery progress. As you can see that this will be some analysis and projection published by some big houses. Morgan Stanley projected that we will have a global GDP of about 6.4% for 2021, led by emerging market, and also the reopening of US and Europe. And the next one will be on World Economic Outlook from IMF, and they are projecting a growth of 5.5% this year, followed by 4.2% for next year, 2022. So why there is a 5.5 growth is because of the collapse of GDP last year. What was the reason? Okay, this will be from the World Bank. They expect global economy to expand 4% this year due to vaccine deployment and investment in key sustaining the recovery. Now, so our take on this will be, of course, if we look at the manufacturing data posted, the latest data posted by the emerging market, particularly China, India, and Indonesia, we see a very encouraging recovery back to pre-pandemic level. So meaning to say that the manufacturing engine of emerging market has actually restored to pre-pandemic level, which is actually a good news, and this is actually a very positive sign for global economic recovery, and we are actually positive on this factor on global economic recovery. Next factor. Now this is the this will be the manufacturing data. The red one will be from China, followed by the yellow, which is Indonesia, and the green one will be India, and last one, the blue line, is the US manufacturing data. As you can see that it is restored to pre-pandemic level, and some particularly US and also India has been above the pandemic level, so which is very encouraging. The next factor will be on the environmental policy. Why environmental policy is one of the factors is because without a doubt, natural gas is still a non-renewable source of energy, and it is still a type of fossil fuel that is going to emit greenhouse gases. It's just that it is the cleanest amongst all the fossil fuel, but it's still having some environmental impact. So, so another angle to look at this factor will be since it is the cleanest fossil fuel. So, and currently across the world, there are still wide usage of other fossil fuels. So the environment policy progress that in the future is going to impact on natural gases prices, because if they implement a stringent policy, so basically what does it mean is they will at least try to have less encouraging policy on those not that clean fossil fuel as compared to natural gas. So this is the angle that we are looking at. As you can see that this is the news. US plans to end fossil fuel finance overseas. So this is actually a policy set across the world, particularly on the Paris Climate Agreement. So what does this mean is that they will actually limit the financial institution financing to fund those fossil fuel projects, and this will actually indirectly reduce the supply of fossil fuel across the world. Now, next is some data on environmental policy. As you can see, in terms of financing, it is quite a huge financing of 1.9 trillion globally since the Paris Agreement has been reached and started. And there is some encouraging progress here, where out of the 33 global banks, 21 restricted coal financing. Coal is one of the most heavy environmental impact fossil fuel because it emits quite a lot of carbon dioxide in the air. And then they also 10 financial institutions, particularly in Europe banks, restricted tar sand oil financing, and only one restricted fracking and LNG financing, and other 9 actually improved policy on coal financing. So meaning to say they are actually getting stricter and stricter for financial institutions to finance those, to provide borrowings to those project that is fossil fuel related. So we are actually positive on this factor, having positive impact on. We are actually bullish on this factor because a stringent policy, environmental policy, is going to reduce the production of fossil fuel, and this actually will have upward pressure on price. And in the event they still encourage the usage of, for now, because natural gas is still the most cleanest fossil fuel, so they might still be allowed natural gas usage for now, but slowly reduce the reliance on coal and also petroleum, and this is going to having a positive impact on natural gas in our point of view. So we are actually bullish on this development. And this is the Another impact will be on the renewable energy, meaning to say those clean energy. As you can see that the renewable energy has started to increase gradually, but actually is rather slow but gradually. And you can see that the reliance on coal consumption is getting slower and slower, decreasing, and petroleum consumption also. But at the same time, natural gas and renewable energy are in the advanced mode. So this actually is quite an encouraging impact for natural gas prices on the long run. And this will be the renewable energy projection. This is the low carbon consumption projection. So basically this natural gas will be under this line. So as you can see that they are actually projecting that this low carbon fuel and also renewable energy is going to increase in terms of usage in power generation for at least 10 years to go. Next, the renewable energy progress are mainly driven by electricity generation sectors, and because it is clean and also it is renewable, so without and minimal impact to the environment. And this is the breakdown of renewable energy shares. As you can see that gradual increase with the top sharing from hydropower, and then followed by onshore wind, and the third one will be on solar. Okay, next. This is the renewable energy progress. As you can see that there are some countries that already implemented renewable energy quite aggressively, and these will most are actually large country, as you can see. So renewable energy is going to be the next trend for sure. And this is the sharing between renewable and non-renewable electricity generation based on OECD countries. This is actually an economic body, quite a large number of members inside across the world from 2008 until 2018. As you can see, renewable energy sharings are gradually increasing. Okay, we are actually neutral on renewable energy factors, but for the next 5 years, actually the impact of renewable energy progress is still rather minimal because it's still rather slow in terms of the sharing, and while this transition from non-renewable to renewable energy, our take is that it is going to be a positive impact on natural gas because being the cleanest energy, for sure. While the transition takes place, they will still need some form of abundant supply and consistent supply kind of a source of energy for power generation. So I would say that demand for natural gas is still going to be there for stay. But of course, after 10 years down the road, it could be another different story. But for now, near term, it is going to be a positive development for demand on natural gases. Now, another factor will be the transition from coal power plant. As you can see, due to environment impact issues, a lot of countries have started to retire on coal power plant generation and switch to natural gas. Some are okay for those that can be convert into natural gas power plant. They will convert. If not, they will retire the entire coal power plant and build new one that can be run on natural gas. As you can see, this is the global coal consumption for 21 years. As you can see, it has peaked somewhere near 2014 and has been decreasing gradually ever since. And they are projecting that there is some increase in consumption on this year for coal. One of the reasons why is because due to the COVID impact on economy, they are going to need a much cheaper alternative to generate power, which is actually coal, and we expect this is going to be a temporary phenomenon. And this will be a news that I retrieved. As you can see, that global electricity production from coal is on a trend of fall, around 3% in 2019, the largest drop on record. This is a positive development. Now, this will be the number of coal plants being shut down as compared to the opening. So they are net to net, they are still declining in terms of number of coal power plant operating. Next will be on the change in coal and gas fire power generation. As you can see that there has been a big decrease in terms of coal power plant as compared to the natural gas power plant. As you can see that net to net natural gas power plant still recorded increase, but as compared to coal power plant that is reducing quite rapidly. This is also another news on coal-fired power plant replaced and converted to natural gas. Okay, we are also bullish on this factor. This is going to having a positive impact on natural gas because of the transition from coal to natural gas power plant. And on overall, we are rather bullish and expected natural gas to be at least supported in this year with the rollout of COVID-19 and also strong global economic recovery, and the transition from coal power plant to natural gas and as a cleaner alternative, we're going to spur demand on natural gas. This is on the fundamental impact. We are overall bullish on the development for this year. And the last segment will be on the market outlook, technical market outlook. Now, this is the daily chart of natural gas spot contract. As you can see that on the daily chart, it has been on the nearer term of since October is recording a lower high, and it is facing some resistance when it traded above $3. But having said that, on the longer time back to September, which is still within the uptrend of higher low, which is basically indirectly means that it is still basically supported, and this also indirectly show that underlying demand is still there for natural gas. The next one will be on the weekly charts, as you can see, which is actually market is currently still trading off the low, and this is near a range bound market within the congestion area, and we are expecting this to be supported at least at the level of 2.5 per US dollar for natural gas prices, and MACD is still on the above, and this is still above the 50 moving average. This is the point of figure chart. As you can see, this is much clearer in the sense that you recorded a steeper higher low line as compared to the lower high. So this is also actually showing some underlying strength in natural gas price. On summary, actually on summary on technical outlook, price is currently experiencing some pullback. One of the reasons why is because prior to this there is a freeze in Texas that actually causing some disruption in production, and as the weather turns warmer after the Arctic freeze in Texas, so price has been started to have a downward pullback, and in the near term we expect the market to be consolidated to near 2.6 per US dollar per MMPTU for natural gas, and in the medium term we are already projected upward trajectory. And if you find that the price is near 2.6 or 2.5 something, it could be potentially a good buying opportunity on weakness, and we actually have a stop loss. If it break and stay below 2.5 per MMPTU, this is going to be the technical aspect is going to evolve into a downtrend market if the support of 2.5 is broken and stay below this level. But if it's managed to stay above this level and continue to trade from here, we actually are having a profit target of it could reach back to 3.2 per MMPTU. This will be our projection on terms of technical outlooks. Now that's actually basically the whole presentation for natural gas. And leave some room for questions. Back to you, Kamal.
Okay, so thank you, Mr. Chong. So for those of you who have questions, please fill in the question box and Mr. Chong will answer it. Okay, we have one question from Kevin. He asked, natural gas, is there any related with crude oil?
If you check it based on correlation, there is actually no correlation between crude oil prices and natural gas prices. One of the reasons being in terms of the area of usage for these two type of fossil fuel is basically having huge difference. Where you can see crude oil are mainly used for transportation, but the natural gas are more towards power generation and also industrial usage. So in that sense, I would say it is not correlated to crude oil prices.
Okay, and the next question's by Shauki Ahmad. Why March always have a big movement?
Why March having a big movement? You mean downward pressure? It's a bit
Mr.
hard to
Shauki,
answer.
okay,
Yes,
yeah,
okay. Generally, you see somewhere between first or second quarter, there are some downward pressure, but that is not in a consistent pattern. But generally, yes, one of the reason is because of first thing is on the main factor will be on the power plant maintenance. And also another thing will be in terms of weather. As you can see, natural gas is also a source of energy for heating. So this will be the period where demand for heating is generally at the lowest level. So that is one of the reasons why the two factor, power plant maintenance and also demand for heating are generally lowest during this period near summer. But don't take this for granted, yeah. Okay. Next question. Okay, the question here is, would the natural gas price be influenced by Biden administration, like the fiscal stimulus approval, for example? Personally, yes, for me. One of the reason is first thing, the fiscal stimulus, of course, and also Biden's policy on environmental protection is much more stronger, where one of the first thing Biden did was to re-enter the Paris Climate Agreement, as opposed to President Donald Trump that exited. And I will foresee that there will be more stricter and more policy to be implemented when it comes to environmental protection. I would say to answer you this, yes, it influences and it's going to be an upward influence for me personally. Any next question? Any question? Okay, I'll wait for another minute for a question if there's any. If no, we will proceed to end the session. And please do rate the on the poll after the webinar. Kamal, are you there, Kamal? Okay, another question. Where can we learn on how to use the trading apps? Oh, this one is easy. Basically, what you do is you go to our website. Okay, and you go to our website, www.kenangafutures.com.my, and there is this is under. If you can see my screen, let me see sharing. If you can see my screen, you can click on there is a KDF Trade Active menu, and when you move your mouse over, there is a tutorial video there. You can click on there. We have actually created a lot of video clip that you can that will teach you step by step on how to use the trading platform. Yeah, there you go. From installation to login to set your password, and on how to set the order journal, pricing summary, and all the way to place order. Okay, any other question? Okay, Kama, you back? Okay, if you have still have question and if you would like to ask, you can actually email to me, or if you have if you would like to have a one-to-one coaching session, what we do it virtually, you can actually go to our website under event calendar to book a slot, and then we can actually arrange for our team member to have a one-to-one coaching session to you on the area that you would like to explore. So please feel free to do so. And if without any question, so I will pass back to Kamal, and Kamal will proceed to get the pool out before we end the session. Back to you, Kamal.
Okay, thank you, Mr. Chong. Okay, thank you everyone. Should you have any further questions, please drop us email at bcrm@kenanga.com.my. We appreciate you being here and I hope that you enjoy the webinar today. Please take a minute to rate our webinar and your feedback is highly appreciated. Again, don't forget to register for our next webinar. Thanks again for joining us and hope to see you again in our next meeting. Stay safe and good night.
What are you clicking?
Click KenangaFutures.com.my, Malaysia's leading derivatives broker.